Well, thank you so much for joining us, and happy Monday to you. I know that's a bit of a conundrum, but anyway, hope you have a good one out there. Thanks for joining us, and I am joined by Brian Hoops, president of Midwest Market Solutions, this morning as we get ready to start a new trading week. Well, Brian, we had a downward spin on the markets last night, and I was just checking the wire as I came down from the office, and I don't see any overnight export sales again today. So now are we hitting a dry spell again?
Well, good morning, Marlon. There's a fear. Part of the reason why we're down so hard overnight is an economic slowdown in China once again. So crude oil values plummeting this morning as it believes China will be using less crude oil, buying less product from the U.S. And it's the same thing with grain products. There's a fear that they will be buying less corn, soybeans, even wheat. And that's part of the reason why we're seeing such a big drop in our values overnight. Of course, the other reason is some forecasts that started around midday on Friday talking about additional rains are looking more likely to happen this week. This is some of the driest areas of the Corn Belt, western Iowa, central and northwest, northeast Missouri, maybe parts of Nebraska even catching some of this rain, but these are rains that are badly needed. And, it's probably going to be really too late to help the corn out in a lot of those areas. Soybeans, I think, is a different story. It will help the soybeans fill out their pods, especially some late planted soybeans or even double crop soybeans.
So you were talking about the big drop in crude oil. We had West Texas crude down $4.87 here this morning. And usually that would put pressure on soybean oil and also on the corn market then through its biofuels connection then?
Yeah, it's a relationship, mostly with soybean oil, which is down sharply as well. Crude oil also relates very closely to the corn market, and we're seeing a big drop in the corn. And really, as I mentioned, the rain is too late to help out the corn crop in some of these dry areas. But with crude oil being down, I think that's dragging corn. Of course, soybeans dropping so sharply, probably pulling corn off of its highs as well. The corn market, I thought, on Friday acted very well. Tried to sell off at one point, but the news was friendly, I think, in that report for the corn market, and we rallied on that fundamental news, and I suspect that's going to be the market that's going to try and find some support this morning. And if we're going to rally or lead a charge out of here, it will be by the corn market and end users stepping in like they did at midday after the report came out in the corn. They would step in once again, some end users, some commercial buying, especially end users in that western corn belt that's badly going to be needing some crop, and we expect to see basis really tighten through the fall and winter months.
Let's look at these prices then overnight, and with our quotes provided by Bar Chart, here we go. On the September contract, we are 19 3/4 lower this morning at 620. December down 19 3/4. We were at 622.5. And actually, that reminds me, I wanted to ask you, Brian, on the September contracts, are the traders looking beyond September now, do you think, or is September still the key trading month in all these grains?
Yeah, I think for the most part, most of the trade interest has moved into the new crop categories. Now, some of the elevators still may be building off of September, but most of the trade from a speculative standpoint is focused on that new crop of corn and soybeans. So they're looking at November beans, December corn.
Okay, so November soybeans right now are down 48 3/4 cents. As we wrapped up that Globex trade last night, it finished at 14.05.5. And we saw earlier a lot of pressure in the wheat trade overnight. September Chicago wheat was down 20 3/4 at 7.85 1/4. December down 19 3/4. Kansas City wheat, similar action. September down 22.5. December down 22.5 as well. Minneapolis wheat, you had the September down 19.5, and December was down 19.5 cents. On the cotton, though, a whole different story. Expanded limit up overnight, 500 points higher, 5 cents higher. That puts December at 113.59. That's a whole different story. Okay, we'll come back in a moment and we'll talk livestock with Brian Hoops right after this. Come on back. Right before we got into the break, we showed the cotton prices, and they were just exploding higher overnight when the grains are getting trashed. And I just wanted to talk with Brian Hoops about that here real quickly. I noted where on Friday, after the USDA report came out, the WASDE report for the grains, that caused some consternation among the grain traders. But the cotton market finished, I believe, limit up on Friday for 400 points higher, I believe.
Yeah.
So last night we're 500 points higher. You and I were just chatting during the break about the fact that what had been kind of a bearish report on some of the grains was not that way for cotton, was it, at all? They really trimmed their production?
Yeah, they really just slashed the production almost to the lowest levels in since 2009, I believe. I could be wrong on that, but it's a big cut in the production of cotton this year. And so prices did go limit up after that report on Friday, closing 4 cents higher. They expanded limits to 5 and pretty much just lock limit right away overnight when the cotton market started, and we're seeing that continue this morning. So we may have several mornings of limit up conditions in cotton because of the slash in production.
Well, let me review where we finished up last week on the livestock trade. We'll go to live cattle futures here. And on the big board, we were a little bit lower on Friday with October live cattle down 60 at 144.50. We finished up with the feeder cattle market actually $1.22 lower on that September contract at 183.37. We had the lean hog market showing October down $1.05 at $100.02 per hundredweight. But I just wondered what you think the opening calls will be here for the livestock trade, given the downward spiral that we saw the grain markets in last night.
Yeah, with the corn market being down as much as we saw last night, almost 20 cents, you have to expect feeder cattle are going to be sharply higher on the opening, should lend some strength to live cattle. The cash markets last week in live cattle, $4 to $5 higher in the Southern Plains, so 140 trade in Kansas and in Texas. And then you had, at least $3 to $4, maybe $5 better on a dress basis. So the calls this morning for this week, steady to higher again. Cutout values were sharply higher by Friday's close. We do have a cattle on feed report coming out on Friday. We look for placements to be up again, because of heavy movement out of drought-stricken areas and especially out of pasture areas moving into the feedlots. So we'll see some bigger numbers on the placements. And that could translate into bigger inventory numbers. But this market looks and feels like it's trying to break out technically to the upside. And we're probably going to continue that trend higher this morning with a strong opening based off of the lower corn market.
Great information. Thank you, Brian, for joining us to kick things off here for this week. Brian Hoops of Midwest Market Solutions. All right, we're about ready to dive in here, Janet. We get things rolling at the bottom of the hour.